Welcome to the end of day review for Tuesday, the 19th of December 2023. Jumping straight into the economic calendar, as mentioned in the outlooks, there are no red folder news events for the day, and thus there were no news releases to take into consideration when trading for today. Moving swiftly into the 4-hour chart for GBPUSD, actually perhaps maybe just to touch on the daily quickly. What we can see is that we actually validated the swing high as a valid swing high because the next day actually didn't wick above that the previous day's high, and thus confirmed to us that this is indeed the swing high. As a result of that, in terms of interpreting the 4-hour, we do have confirmed 4H market structure. However, we also have the fact that the ERL continuation momentum phase that was applicable at this point is no longer applicable on the open of Friday. As a result of this, we can consider longs. However, on Monday, maybe just to recap that, the ERL continuation momentum phase and reversal phase were valid on Friday specifically, because at that point in time we had 5 continuous bullish daily candles, and the likelihood of a continued bullish candle was reduced due to that fact. However, the fact that we are in momentum enabled us to both long and short on Friday, which would have been in and around here, and then we came down there. Then what we can see is yesterday we reacted to these buy to sell wicks. We had a minor reaction, but ultimately these buy to sell wicks failed, and we came lower into this wick, specifically reacted to it and then pushed up. In terms of what our options were for the day, like I mentioned, option 1 was either we come to this pro trend extreme right here, or alternatively we break this chalk level and then we break it with a body break and then validate this pro trend primary leg in order to enable us to trade from. What I do want to highlight is the fact that this OB wasn't necessarily valid, and it's because it didn't react to anything precisely. While we did have this OB, what you can see is this actually wicked above it and didn't respect it, and thus it's hard to interpret this as a supply demand buy to sell wick flip, similar to what we have here. As a result of this, I didn't consider it valid to actually trade from this level. However, you can see we did have a reaction from it, and I guess what I would have said is that the pro trend primary leg is validated at this point. And the reason I am saying that is because we got this body candle closure which occurred an hour after New York open. However, by that point in time in the day, we had already moved beyond the average daily range for December, which is 100 pips. And as you can see, when this candle closed, it was 116 pips. In which case, taking any further longs simply don't make sense at that point. The other thing, I guess what I want to say is going forward in terms of tomorrow, the levels we can consider trading from a 4H perspective is we do have these buy to sell wicks right here, because it is an S&D flip, and the fact that we are validating a primary leg, this level does hold some significance. And then obviously we got the extreme of this primary leg. Jumping onto the 15 and 5 minute, like I said, I wouldn't have been on this time frame at all. However, if you did consider this level as a valid area to trade from, I don't see any way that you would have got into a trade or got tagged necessarily. The issue was that price moved up quite significantly with a lot of momentum and didn't necessarily retrace sufficiently. In terms of a London trade, you'd want to anchor yourself to the extreme and consider a deeper pullback in terms of at least a 38.6. However, at the 38.6 level, that is our only liquidity in the leg, and if you were going to put an entry or place an entry, you'd likely place it something like this or even like this, covering the low of the day. But yeah, as you can see, price never came back, and then like I said, in the New York session, it was price had already moved quite significantly, and taking an extended long position this late in the day whilst price moved this much is not high probability, and the chances are that price is going to reverse at some point. The issue is we don't know at what point it's going to. Also, the fact is that we don't have 4H narrative backing to support shorts, and any short rates are quite low probability. That essentially brings me to the end of day review for today, the 19th of December 2023.